Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, August 8th, 2020, and this is the weekly market update. The first thing I want to talk about is this Forbes article that came out, and it kind of dovetails or kind of continues the discussion we had the last couple weeks about the renewable energy, green energy. You know, we talked about Europe coming out with a big stimulus plan, $500 billion to be distributed into green energy, renewable energy, reducing carbon dioxide, equity and justice, all those great things. And, you know, we're not going to swim upstream on this thing. What we're going to do is show how we can take advantage of this, right, as investors and speculators. And I want to say that there's so much money involved in this now. I mean, hundreds of billions of dollars are involved. There's so much lobbying effort. There's so many people that are invested emotionally into this that it's going to happen in the West. And I suspect that if the political climate is conducive enough, it'll happen at an accelerated rate. What do I mean by that? We don't really know what's going to happen in the elections here in the United States as we come to November. We can see that we got a big problem here. We got unemployment, tens of millions of people out of work, decimated economy, self-inflicted gunshot wound. That's my view. Okay, fine. How do we get out of it? Well, Keynesian economics stimulate, create jobs, right? And, you know, if you get a Joe Biden presidency, if you get a more leftward-leaning House of Representatives, if you get the Senate into the Democrats' hands, we're going to go full-blown into this thing like the Europeans are. And they're not going to go out and, you know, build bridges and roads. We're going to go out and build more wind turbines, solar panels, and batteries. And that's great. That's great for us. Why is that great? Because the view or the idea, as I said before, that renewable energy is renewable is not true. It's nuanced, like everything is. Solar and wind obviously are renewable. The machines and devices used to capture that energy are not renewable. And that kind of takes us into this article, which I wanted to go over. And like I said, I'm not going to politicize this anymore. I'm not going to argue it. It's going to happen. That's the zeitgeist in the West. It is what it is. Okay? So it's time to figure out what reality is and math, because we don't suffer from cognitive dissonance here. Most of the people here come here are able to put their biases aside and say, hey, okay, if something's going to happen, how do I take advantage of it? So let's get into this. This is an article at Forbes. I'll put a link to it in the show notes, as I always do. The widespread view that fossil fuels are dirty and renewables such as wind and solar and electric vehicles are clean has become a fixture of mainstream media and policy assumptions across the political spectrum in developed countries. When we say this, this is exactly true. This is the OECD countries, Western Europe, the United States, Canada, Australia, New Zealand. That's what they're talking about. Because if you look at what the developing world's doing and what Russia, China, India, and places like Indonesia and Philippines and places like this that are developing, this isn't their focus because they're living in another reality of development and having to provide baseload power, which isn't going to happen with solar panels. So this other mantra, you know, 2050, net zero by 2050, calling for carbon emissions to be completely mitigated within 3 decades, is now the clarion call by governments and intergovernmental agencies around the developed world. And this is exactly true. This is exactly part of the main one leg of the three-legged stool of the recent $500 billion EU fiscal stimulus that we talked about at the beginning of this discussion, right? We talked about it last week or the week before last. The stimulus plan that the Europeans came out with, it's one of its pinnacles is green energy and the reduction of carbon emissions. So it goes on, it talks about this professor, this article. It has good links in here to another article. I mean, I made the link already to the work from the Manhattan Institute, which showed that what's going to be required, the amount of earth-moving raw materials that will be required. But I thought these little vignettes and these little factoids show you what the potential is going to be for the commodity bull market I think we're going to see if we continue down this road. If we replace, this is just talking about the UK now, if we replace all of the UK vehicle fleet with EVs, electric vehicles, assuming they use the most resource-frugal next-generation batteries, so that's an assumption, we would need the following materials: about twice the annual global production of cobalt, 3/4 of the world's production of lithium carbonate, nearly the entire world production of neodymium, and more than half the world's production of copper. That's based on 2018 production. That's just for the UK. That's just for the island country of the UK to go to complete EVs with the most resource-frugal next-generation batteries, which aren't even in production yet. Do you see where this is going? Do you see the potential? Now, there's a wag out there that's thinking, John, here you go again. You Gen Xer, you little thinker, you. We'll just go out and find more material. Well, that's a statement. That's a assumption or an assertion. But, as we stated last week, does that actually exist? We're seeing declining grades in copper mines. We're seeing declining, it's harder and harder to get the materials we need because, typically when you're developing and mining, whether it's oil, coal, copper, whatever, you're going to go after the low-hanging fruit, the easily exploitable resources. And now we've exploited a lot of those, and we are into the more difficult to find and develop resources. I mean, I've talked about this before in previous videos, and I guess I have to, revisit it also if we're going to continue down this view with this theme. Where are we at, where vis-a-vis where we were 25 years ago as far as the grades in a copper mine? They've went down. I know that for a fact. I just can't remember the numbers. I'm going to have to do some more research on this or go back to some previous videos. We know that. And so the idea that you just push a button or stay up all night and code it out isn't going to work. I mean, the stuff, there's a tremendous amount of resources in the Earth's crust, but is it concentrated enough to make it economically viable to exploit? And how long does it take to do that when there's been underinvestment for, 20 years? And the same Western democracies that want to have a 2050 emission standard won't let you mine in those same countries. So it's an interesting dichotomy. It's cognitive dissonance, the attempt to hold two different ideas that are opposing in your head at the same time. So let's go on. Professor Kelly estimates that if we want the whole world to be transported by electric vehicles, the vast increases in the supply of the raw materials listed above would go far beyond known reserves. That's exactly right. I just interviewed James Howard Kunstler, posted that interview, and it was very far-ranging. He's a very prolific author. He wrote the book, The Long Emergency. Do I agree with everything he says? No. I'm not saying he's a Malthusian, but, I think, looking at the fact that we're just going to be able to continue our happy motoring, as this is his words, happy motoring Walmart society and visit Disney World with the family, and it's just going to happen on wind, solar, and electric vehicles, it ain't going to happen. But if our political elite and the zeitgeist of the population wants to try to go there, it's going to make us very wealthy. There's really 2 or 3 ways that you can try to do a energy transition. It can be just the free market, the free hand of the market says these technologies, i.e. wind power and solar power, are so much better than the other technologies and so much cheaper that everybody just capital flows to them because the margins are so much better. Well, that's not really the case. So there's 2 other ways that we can get there. And I suspect that's what's going to happen. Number one, they're going to be subsidized massively. They already are. And they'll be continue to be if we get the right political environment. Or you could just mandate it. A government can just say, like they said in California, you can't build any more houses now with natural gas for heating or cooking. I believe that's what the law is. I'll look that up. But you can do things like that. You can say, okay, well, it's 2020. By 2025, you can't sell any more internal combustion engines in this country. And then people will, obviously, it's like, the low flush toilets we had. People will be going around scrounging in junkyards or going to burnt down houses or abandoned houses and getting the regular high flush toilets. I mean, I've got these low flush toilets in my house, and they're terrible. They stink. But, it's the same thing with the incandescent light bulbs. I mean, people call you over to their house, and they want to show you how green they are, and they say, look at this, these green LED lights I have here, and I'm like, I can't see you. You're dim. You're dim. I can't see you. So the people want to go here. We're not going to argue it. We've shown now 2 weeks in a row from various research, and I will put the links to this research, not just the article. The links are there to this Professor Kelly's research. The paper from the Manhattan Institute stated basically the same thing. And so if we go there and we're going to shovel hundreds of billions of dollars into this, hundreds of billions of euros, I mean, the demand on the resource markets are going to be tremendous. And then that's the wind in the sails. And then if you put on top of that, if you pour gasoline on the fire of, unlimited currency unit creation, I mean, look out below. So I like what is said at the end of the article in the conclusion, and I just had to put this in there. It's not economic. The determination not to know or to look away when the facts assail our beliefs is an enduring frailty of human nature. The tendency towards groupthink and confirmation bias and the will to affirm the scientific consensus and marginalize skeptics are rife in considerations by the so-called experts committed to advocating their favorite cause. Now look, no one's for, like I've said before, I'm not going to argue the merits one way or another. It appears to me that, that's another thing that Jim and I talked about in the interview. The West, and the U.S. in particular, has lost its collective mind. I mean, not just on this issue, but a lot of issues, okay? And the sustainability of our systems now is, after this COVID finally popped what was an impending bubble anyways. I mean, this thing was simmering, cooking, baking for a while. And COVID was the pinprick. And so, if we want to go down this road, that's fine. I'm not going to, I've said it before, I'm not going to stop it. I can't. I have no power. I'm in the minority. So, we don't have enough copper and resources to do it. But if they want to try it anyways, the prices of these things are going to go through the roof. And that's what I find so amusing to myself is not only am I going to get rich, I'm going to be amused doing it because, we can't mine any copper. Trying to start a mine in some of these countries is almost impossible. So where are we going to go? Well, you're going to try to go to Africa or some of these other places. And, the Chinese are already there. They've been there for 20 years. So I don't know where you're going to get all these resources because the Chinese have been going around for 2 decades locking all this stuff up. So it'll be interesting to see how this goes. There's going to have to be some massive infrastructure stimulus program. I was hoping to be bridges and roads. But no, even when I was talking to Jim about these things, I mean, is that really going to be a good investment? Is our happy motoring society, are our cities going to be viable again? Is everything just going to return to the way it was? I'm sitting here thinking to myself, okay, well, with Zoom and GoToMeeting and all these people that were sent home to work from home with italics, how many businesses, how many zealous VPs and general managers thinking to himself, hey, I'm still able to do a lot of this work and get a lot of our work done and get our business run viably, and I don't have the overhead of people commuting in here to some office building in downtown wherever. I don't have the headache of I having to commute. Our margins are still decent. We still have the prospects of making money, and I don't really think I need half these people now. That's the real danger. I've said that before. You're not going to get real political change into this country because you have a bunch of purple-haired millennials walking around throwing, frozen water bottles and homemade Molotov cocktails at the police. or marginalized portions of our population that no one listens to anyways. What's going to cause real political change and earthquake is when this Mandarin class of suburban people that have been, going downtown to work in their cubicle realizes that they're asked out of a job. Then you're going to see the real political fireworks. That's my view, at least. And so we're going to have to do something, because that's what people do, right? They don't really look inside themselves. They say, somebody do something. And so they'll say, okay, let's have a $500 billion. We need to get to carbon neutral anyway. So let's do it. And what's the mechanism going to be? Well, the mechanism is going to be our old friend Jay Powell. This was a quote from him last week. He was on CNBC. I don't have a link to the video, but I do have my favorite cartoon here, which caricature of him showing him churning out currency units. And he said this. He said the debt is growing faster than the economy. He said that's talking about the U.S. debt. Because all the programs and all the free shit that we're sending out to everybody to keep people floating. The debt is growing faster than the economy. This is not the time to act upon those concerns. Okay, so he's telegraphing to you. I mean, I don't know if this guy has to come to your house and tell you that they're going to devalue this currency. I mean, I don't know what else to tell you. I mean, he's not going to make it any more plain than that. Okay, and if you don't get it now, I don't think you're going to get it. And I'm getting it. I mean, this is happening all around the world. Look at the Turkish lira. That thing is like falling apart. That thing is crumbling as we speak. I put up a chart. I probably need to revisit some of these charts, but I mean, even before this crisis happened, I showed you why one of the reasons why I was bullish on gold and other commodities was because I showed over and over and over a year ago how central banks around the world were collectively and individually debasing their currencies, and that all their currencies were gold was making new highs in these currencies. The only one that wasn't the dollar. Now we have a nominal new high in gold prices in dollars, but not a real new high. And we will have a number on gold, I think, before it's all over with, that's going to even shock me. And so this is where we're going. This is going to be the model. I mean, do they have a choice? What are we going to do now? I mean, 30, 40, 50, 60 million people with no prospects? I mean, businesses have been destroyed. Now we're starting to see the things I was being castigated for saying back in March, which was the cure is going to be worse than the disease, now is actually being talked about. So again, we were on the forefront in the vanguard, and people were saying, well, this isn't the flu. I mean, all the Kens and Karens were ankle biting me. And, now we say that, it really, the effects of shutting the world economy down, I don't know, probably were worse than the actual virus. And that doesn't take, people don't want to admit they were wrong. But, were they? I mean, it was a bad choice based on incomplete information. No one really knew how bad it was going to be, but it became very apparent very quickly, like in March, that this thing wasn't the Spanish flu, that this thing wasn't going to wipe out half the world. And then we had emergency room doctors and all these people coming forward, Dr. Ioannidis at Stanford, who does statistics on epidemics, telling people, I remember showing the video, and looking at the video. He's saying if you were under 60 years old, you have more of a chance of dying driving to work in a car. If you're over 60, it would be akin to the risk that a over-the-road truck driver has of dying on a daily basis. And so people die in car accidents, but we don't ban cars. People have cardiac arrest. They have cardiovascular disease. We don't ban fast food. What we say is we look at facts, and then we try to look at risk benefits. And we locked everybody down. Other countries did it. Now the facts are there. You can look at what Sweden did and some of these other places, and they're not in the same spot we are. And the data has gotten better. So now we've cratered the economy. We've blown out the debt. The deficits are huge. We now have the Federal Reserve in cahoots with the Treasury, and they're saying the debt is growing faster than the economy. Well, that's not good. This is not the time to act upon those concerns. So he's telling you, number one, that interest rates are going to stay low forever, and that they're going to print whatever money they need to do. And when they come up with these cockamamie schemes of theirs, they're just going to print money and pay for them. How that's not good for commodities and real assets, I don't know. It has to be. You're certainly going to have negative real rates, especially when the oil price gets going. So, speaking of gold, I mean, look, guys, this is a chart of gold. I don't know how well you can see it on this chart. I mean, we had a big pullback last week. It was inevitable. Nothing goes straight up. You know, people were buying this and the various wags. You know, if you suggested that there would be a pullback or a rest or a consolidation, which happens in every market, you can look at this chart and point them out. I can point out, you know, half a dozen consolidations and pullbacks in an ongoing bull market. You were castigated or, you know, excommunicated from the gold, twitosphere. Guys, you're going to have pullbacks in these markets. Sometimes it's good to take some money off the table, like when Caledonia went up 48% in 1 week. Yeah, it's probably a good idea to take profits. That doesn't mean that I'm out of gold forever. It means that we need to see a consolidation. We have a lot of FOMO going on, and we have it's way overbought. I mean, look at the relative strength, guys. This is way overbought. We need to digest these gains. We have a big breakout, and we need to digest these gains. It's going to take a while, and we're getting into a more, shall we say, weak seasonal period for gold. So it's all matching up very nicely. The fundamentals, long term, over the next several years, or over this decade, I think at least, are tremendous for gold. That doesn't mean that, you know, you should rush out and buy it today. You should wait. You should be marshaling your resources. You should be looking at the kind of stocks you want to buy. And then you should say, I didn't miss the boat. You didn't miss the boat. This thing isn't over. So this thing's going to pull back. See, what problem is people now get FOMO, and that lizard brain takes over, and they go out and they buy at the top. They top ticket and buy it. The thing pulls back. You know, if the gold price pulls back $100 or $150 an ounce, which very well could. I mean, half this move between 1820 and 2075. I mean, you could pull back easily to 1900 without a problem. And the gold stocks, some of them will come down 20 or 30%. So they'll sell and swear off gold in gold stocks forever. That's what happens with novices. That's what happens with people that are gambling. That's what happens with people that don't know what they're doing. And so to say, well, you know, it's not about wrong or being right. This is just experience and wisdom and obvious. This is elementary. This is basic blocking and tackling. So it's not over. You have to digest these gains, marshal your resources, find out the companies you want to buy, and when we pull back over the summer, which I suspect we will, I don't know how long, it may be a week, it may be 6 weeks, I don't know. But we are way overbought. When we get closer down to, you know, down here on the relative strength will be the time to buy. You kind of see how this works? You have a pullback, relative strength gets weak relative to the rest of the market, and then you know, it's the same thing. You make, now this grind higher is a perfect example. But this is way overbought. You don't want to be buying at these levels. I wanted to talk about oil drilling drops to a 15-year low. I mean, guys, I've taken some of the profits from gold that were overbought, and I've recycled them into some oil stocks, one of which a tremendous opportunity, which I just shared in this month's Actionable Intelligence Alert newsletter, and also into my public statements on Antero Resources. And the thing just keeps getting better in a natural gas situation. So that's what you want to do sometimes. When something's overvalued, you want to recycle cash into undervalued things. That's a good thing to do. And so this continues. This is beyond a depression, this total nuclear holocaust in the oil industry. Drillers cut exploration in U.S. fields to a 15-year low as billions of barrels from old discoveries became worthless and explorers abandoned growth plans. Article in the Dallas paper, I will put a link to it. The number of active oil rigs in the U.S. fell by 4 to 176, the lowest since 2005, according to Baker Hughes. ExxonMobil and Chevron have warned they probably will wipe billions of barrels of reserves from their books because weak prices have made them unprofitable to pump. And so what we're seeing is, if you've read, Goring and Rosenzweig came out with their Q2 review. It's devoted completely to oil. I suggest you read it because oil supply did not drop as much as we thought it was. We thought that when COVID hit and all the lockdowns happened, that oil supply would drop by 30 million barrels a day. It didn't do that. And we thought the supply would drop also, and it didn't happen. And what I was shocked by was the resilience of the actual oil demand. When you shut down the economies, that's how inculcated into everything oil actually is. And so, if you read Eric Nuttall's 9-Point Partners, I think I shared it on another video. He talked about this on BNN late last week when he was on, that demand is coming back a lot quicker than people think. But supply now, the lack of investment, when you have major integrated oil companies warning that they are going to have to wipe billions of reserves off their books because they are uneconomic, this is a problem. And if demand comes back like I'm thinking that, I think the price of oil is going to shock people where it's going to be this time next year. So I don't have time to get into this right now, but that's, I think it's interesting to note. And the longer that rigs aren't turning, yes, there's some developed but uncompleted wells. U.S. shale production is dropping like a rock. And the underinvestment around the world is, it's cumulative. This is an extractive industry. If you don't invest in it, eventually you go out of business. So this is the kind of news we want to see at the bottom. This really wrings out any bulls that are there. They're like, why are you even talking about oil? But if you deep dive it, if you know what you're talking about, if you understand the business, you can see that demand is coming back and supply is not going to be able to meet the demand. Wanted to talk about gun sales. Continue to set records. That was the other public company that I talked about, Strum and Ruger. Their earnings came out. This is good, right? The number of Federal Bureau of Investigation background checks, the barometer of Americans buying guns, hit another record in July when 3.6 million Americans were loaded up. So you have to go get a background check before you can buy a gun, obviously, or you're supposed to at least. And it's usually a precursor to gun sales. Doesn't mean that everybody that goes and gets a background check is going to buy a gun, but it does say that a lot of people, excuse me, are wanting to buy a gun. Why? We've talked about this before. It was originally COVID. They thought the end of the world was coming, zombie apocalypse. And then after these riots and this proto-Marxist whatever is going on and all the play it's getting in the media, hey, you're scaring the straights out in the suburbs. People are like freaking out. And what's interesting is I used the article to do this. I didn't just go to get AP article on this, which you could get. God just would have gave you the plain vanilla. I'm going to give you the link to the Chinese state media, and it's kind of interesting because they work in a lot of anti-Trump and racism, and white nationalists are driving this, right? Because we're going to have a civil war here, which could happen. But I just thought it was interesting and it amused me that the propaganda goes both ways. In the NICS's 22-year history, that's the methodology that's used by the FBI to check background checks. March, June, and July of this year are the 3 biggest gun sale months. And I suspect that's going to continue. Why? this is going to be a very contentious election season. It's another thing that Jim Kunstler and I talked about in that interview that I did with him, the collective psychosis that's going on in the U.S. right now, and the opportunity or the danger of something kicking off bad, like a Harper's Ferry type incident. So this isn't the best thing. I mean, it's good that you should be able to buy a gun, and people want to feel safe, and they don't like some of the things they're hearing. Like I said, you're scaring people and scaring a lot of the straights, and they want the protection or the supposed protection of a gun, and also the fact that there's a good chance. I mean, we have an election coming up. It's the same thing that happened during the last election when Hillary Clinton was running. And the Democrats were saying when they get in power that they were going to, restrict people's ability to purchase a gun. So I think that you're going to see a lot of people coming up to the election, especially with these polls that are showing, Biden crushing in a blue wave. I mean, I don't buy it, but, that's what people are hearing. That's what they're being told. That's what the media is telling people. So people are saying, hey, if I want to get a gun, I better get one now, because I may not be able to buy one come January when the new administration takes over, and I suspect you're going to have a possibility of a more left-wing House of Representatives and a potential for a Senate controlled by the Democrats. It's always a possibility. Last but not least, I'm starting to get some merchandise, have a actionable intelligence alert store that we opened up on Teespring. Couple of designs here. I think they're cool. I made them. You may think they're goofy, but the first one on the left, split atoms, not raptors. I mean, if you dig nuclear energy and you despise or the pollution of the landscape with these Cuisinarts of the air, as the Sierra Club calls them, then we should be splitting atoms and not raptors. I mean, because a lot of birds get killed. And so I think that's cool. And then this other one, I stole this from another YouTuber. This is saying, I really dig it though. I think CO2 is a life-giving gas. It's for photosynthesis. We're the greenest we've ever been because of the fact that CO2 is such a life giver to plants. And, it's not it's not CO2, it's the sun. The sun is, one of the primary drivers of the climate on Earth, and I think that's going to be the biggest bum rush that people on this planet are going to see over the next 20 years. As this climate doesn't necessarily get warmer, it's going to get colder and more difficult. And running into the situation, just to add to the accordion file of issues that we're going to have. So I'm going to put a link to this. You can check it out if you're interested. There's coffee cups there. I'm going to add some more designs. I just thought kick this off. You never know. Some people might be interested. Some might think it's stupid. It's up to you to decide yourself. But anyways, I do want to say that another, shall we say, indicator, I hate to say this, but another indicator of what I think we have a top in gold is it seems to be, I kind of measure it by the interest I see in my videos and also newsletter subscriptions. I've had a huge rush on subscriptions, which I appreciate the new subscribers, and I hope you'll stick with me. But it seems to be when we get into these near-term highs around gold or some other commodity that we're talking about, I seem to get an influx of new subscribers, which I'm grateful for, but sometimes that can lead to indications of a short-term top. It's not scientific, it's just something I've noticed before. But I welcome aboard all the new subscribers, and you should join them if you're a listener. Even if you don't want to join, if you would, liking these videos, watching the videos, commenting, hitting the bell, that all helps us to get the word out and to talk with other folks about a lot of these issues. So definitely appreciate you guys, and we'll keep making these videos if you keep watching them. So appreciate it. Talk to you next week, guys. Thanks.